March 2024, March 15, 2024, and we're going to be breaking down the S&P 500 E-mini trade today, and this is on my Top Step funded account. So Top Step account. So we starting with the weekly as usual. You guys know how I start, always with the weekly. So what am I looking at here? I'm looking at a bullish week here. Then the previous week we have this long rejection. This is telling me that, hey, at this price we are losing momentum. We're losing momentum. Guys, I'm not gonna go into the fancy candle names, the spinning tops, doji. That doesn't make sense. It doesn't put money in your pocket. All you need to know is that when you see these long wicks, it's losing a momentum. So the price is going up and it's lost momentum on the upside. It's very easy to understand that. We are dealing with realistic things, not things that sell courses and sell books and sound good and look good on paper. Okay, realistic trading things here. So we had our big rejection, 1 week rejection candle here. All right, so we can mark this and say, okay, let's put a line here. So we have a week rejection. Let's go down to the daily. Now, this is our week rejection. Let's bear that in mind. And price went up here. So now we know that below this line, this orange line, we're looking to sell because we get rejected. We get rejected from the week. So below this yellow line, orange line, we're looking for sells and sells only. So coming into today, all I'm looking for is to sell. So I came in, so I try to see what's going on the daily. So this is the current day. Okay, this is yesterday, actually. Yesterday. This is today. This candle is today. This is yesterday. So what happened here? Yesterday's close at this price, 5218.00. So now my goal is to try to get in on a sell somewhere here. This is called a manipulation. If you want to know what a manipulation is, you can check ICT concepts. It teaches all about manipulation and all these things. Okay, I'm trying to keep things simple here and where my kids can understand this and they don't have to ask me all the time. All right, so this is where we want to get in the market. We may not, but we want to get in the market on that side of the field. What happened? Okay, what happened? What time was this? This was 6 a.m. So the best entry of the day came in at 6 a.m. Where was I this time? I was at a coffee shop drinking coffee. I don't trade until 10 o'clock most of the time. So now, what are my options? I need to get a re-entry. So this entry is going to have the highest probability on the trade. Okay, the highest probability is going to come here. The second entry is low probability. That means that you should only go for 1 to 1, 1 to 2. You know, don't be greedy, guys. Just pay yourself and go home. It's Friday, man. Come on. So anyways, I missed that trade. So where am I looking for my re-entry? So I'm looking for my re-entry on the 4-hour level. So I'm coming to the left and I'm marking my 4. I mark this one. I mark this 4-hour level. And I mark this 4-hour level. Okay. Now I'm going to go down to my 1-hour chart, 30 minutes chart. The next thing I'm looking for is I'm looking for some liquidity that gets stuck. Okay. All my trades, before I enter a trade, liquidity has to be taken. And if you don't know what liquidity is, it's a strong understanding that you are the liquidity if you don't know what liquidity is. So again, check ICT concepts for that if you want to understand the full length of it, but I will be talking about liquidity on my channel, and I'm going to be explaining liquidity in a basic format, not complicated, where you can understand it. So where you can understand. So looking at this, I'm seeing that this 30-minute candle here has liquidity here. Okay, so let me get my little liquidity guys over here. This one, Mr. Liquidity here, and Mr. Liquidity here. So we know that we have liquidity there. So I'm going to go down to the 15-minute chart. So my setup is all confirmed. My setup is confirmed. So now I'm looking for my entries. So I'm going to play this forward. So now my liquidity got taken. Guys, this is not random, guys. This is not random. Anybody believe that this is random? I don't know what to tell them. Look, market spike up, and the market spike up, and I got one position in here, one sell position in here. Now I go down to my 5 minutes to look to see how the candle is behaving. Now looking at this, I know that my breaker structure is here. This is breaker structure here. So I'm looking to enter all my position here, but because I'm an aggressive trader, I enter one here. And then the rest I want to be entering below here. And let's play forward and see what happened. I enter a few more positions there. I know that I should be waiting for a pullback, so I still do not enter all my position here. I wait for another pullback, and then that's the pullback you're waiting for. That's what you're waiting for, this pullback. And once you get this pullback, then there's nothing to do but to load up your positions in. And if you go to the line chart, you can realize that this is also called a support and resistance flip. ICT call this breaker block, rejection block, something like that. I don't even know anymore. All right, so then I enter my rest of my position. Okay, where do I take profit? I take profit, I think I close my position out here at this level, because price move from level to level, guys. Support and resistance to support and resistance, fresh levels to fresh levels, supply to demand, whatever you want to call it. Price move standard way. And once you understand the language of how price moves, then you will be fine. So I got out of my trade there. Let's see where price at now. So now you can see price is barely making a little pullback here, and we're going to check DXY to see where DXY is. As you can see, DXY just run into a weekly support and resistance. Okay, why am I looking at DXY? This is called correlations, guys. Okay, this is called correlations. This video is a little bit advanced, so I think I'm going to put this video in the diploma category on YouTube, because this is a little bit advanced. But this is a weekly level. I am not going to hold a trade through this level. Okay, I'm not going to hold a trade through this. It's not easy to break this level, because it's a weekly support and resistance level, and that's DXY, which is the dollar. So let's go back to S&P 500. So now why are you getting this pullback here? Why are you getting this why are you getting this support here? Why? It's because DXY is at a major level. Okay, guys, everything is connected. It's easy to put this thing together. Everything is connected. Okay, there's no level over here. If you look, you can find a level here, but I'm using correlations, and DXY is telling me that, hey, you're at a major level, so I'm taking profit there. There's no way I'm gonna hold profit through this until this breaks and close, clean break and close above this with a nice fat 15 minutes or 30 minutes or 1 hour candle. I'm getting out, or I'm taking some money off the table. All right, guys, taking some money off the table. So, guys, this is my trade of the week for futures market. This is my futures trade, and sitting in a nice little profit on the day. And see you guys again next week. Just remember, guys, if you cannot identify, if you don't know where liquidity is, it means that you are the liquidity. Wait for your confirmation, understand your direction, and understand your setup, and then you enter the market. You don't just enter the market like that. There is steps. Everything gotta play out, and it takes time, guys, but it's possible. If I can do it, man, you guys can do it. See you guys on the next one.